Hi everyone, I'm Bhavya, a final year student from Shahid Sukhdev College of Business Studies. I'm making this video under the guidance of Professor Narendra Kumar Nigam, a professor of derivatives at University of Delhi. Today, we'll be talking about social security schemes, the importance of which we believe cannot be overstated. First, we'll explain to you what are social security schemes. Then we'll talk about two schemes, Pradhan Mantri Shram Yogi Maan-Dhan Yojana and Pradhan Mantri Jeevan Jyoti Bima Yojana. First, let's start by understanding what are social security schemes. Social security schemes are such schemes where government tries to provide monetary assistance to those people who have no income or inadequate income. An example will help you understand how important this is. Ramesh is an old person with minimal savings and no income, and he is finding it difficult to meet his daily expenditures on items such as food, clothes, rent, medicine, and so on. In an ideal world, Ramesh would have either prepared for this himself or had someone else, preferably the government, make arrangements for the same. Social security schemes were introduced by the government for this very purpose, to help prepare those with minimal income. Now that we have established how important social security is, let's talk about two schemes that everyone must know about. Pradhan Mantri Shram Yogi Maan-Dhan Yojana is a government scheme meant for old age protection and social security of unorganized workers. We will begin by talking about who is eligible for the scheme, the benefits they will be able to avail, how can one apply for the scheme, and then finally about the impact it has had. The eligibility criteria is as follows. One must be an unorganized worker with monthly income of Rs 15,000 or less. And secondly, he or she must not be eligible under other pension schemes such as the National Pension Scheme, the Employee Pension Scheme, and the Employee State Insurance Scheme. This scheme is very important in India, as here 93% of the labor force is unorganized. Now let's look at the benefits that one can get. A minimum assured pension of Rs 3,000 per month after attaining the age of 60 years. During the receipt of pension, if the subscriber dies, the spouse of the beneficiary shall be entitled to receive 50% of the pension received by the beneficiary. If a beneficiary has given regular contribution and died due to any cause before the age of 60 years, his or her spouse shall be entitled to join and continue the scheme. Now let's talk about how we can apply for this. And the enrollment process is rather straightforward. The eligible subscriber should visit the nearest common service center and get enrolled for the scheme. For this, we'll also require the Aadhaar number, savings bank account or Jan-Dhan account number, and the registration and enrollment will be done on a self-certification basis. The subscriber will be required to have a mobile phone, bank account and Aadhaar number. Once enrolled, you'll need to make regular contributions. And since PMSYM is a voluntary and contributory pension scheme, the government matches the age-specific contribution on a 50-50 basis. For example, if a person enters the scheme at an age of say 29 years, he is required to contribute Rs 100 per month till the age of 60. And an equal amount yearly will be contributed by the central government. Now let's talk about the impact. The scheme has seen 49 lakh enrollments across 36 states, and hence we can state with confidence that this scheme has done significantly well. Pradhan Mantri Jeevan Jyoti Bima Yojana is a government-backed life insurance scheme. Again, let's look at the eligibility for the scheme, the benefits, how can one apply, and then the impact it has created. To be eligible for Pradhan Mantri Jeevan Jyoti Bima Yojana, one should be an Indian citizen. He or she should be in the age group of 18 to 50 years. Also, having a Jan-Dhan or saving bank account and Aadhaar is a necessity. The scheme provides the following benefits. Life coverage of Rs 2 lakhs. The scheme provides risk coverage for a single year which can be renewed yearly. The insurance holders can also opt for a longer duration through an option of auto debit which is linked to their bank account. The scheme provides tax deduction under Section 80C through its monthly premium payment. Now we'll talk about how to avail this scheme. Since the scheme is offered by Life Insurance Corporation and all other life insurers, they offer a product on similar terms through tie-ups with banks. So one can enroll for this scheme through their banks. After enrolling, one has to pay a premium of rupees 436 per annum, which offers a risk coverage of a single year. Now, let's talk about the impact that this scheme has created. And the impact has been nothing short of exemplary. A cumulative number of 12.67 crore persons have enrolled, and around 6 lakh people have received claims. This scheme has proved extremely useful for low income households during the pandemic. Almost 50% of the claims were paid out due to COVID 19, and the settlement rate since COVID has been around 99.72%. With this, we come to the end of today's video. Life is unpredictable and uncertain. We don't know what the future holds for us. So it becomes imperative that we take steps now to secure our future as well as the future of our loved ones. Social security schemes are the perfect instrument for that. We hope that the information we shared today will help you. Thanks for watching.